Welcome to the Keiser Report. I'm Max Keiser. Meet the New World Order. Same as the old world order. Stacy?
Yes, Max. Well, our first headline is from Liam Halligan, a year marking a return to the old world order. So he was asked, he was writing about his, what was the most significant geopolitical event of 2014, and he says it was when China passed the U.S. in 2014 to be the world's largest economy. In 1980, China's annual economic output was just 1/10 of that of America's. As recently as 2004, the Chinese economy was only half of that of the U.S. In October, though, the International Monetary Fund quietly published estimates showing China's annual GDP at $17.6 trillion compared with $17.4 trillion in the U.S. But the U.S. obviously remains richer per head, but the Chinese are gaining, and this is on purchasing power parity.
Yeah, well, you know, what's interesting is that you go back a few thousand years and the dominant economy historically has been China. So they are reassuming the mantle of world-leading economy. The U.S. was an upstart. It had its day, but now it's kind of like also ran.
Yeah, you know, speaking of the past few thousand years, I saw something in the past week where Ambrose Evans Pritchard was noting that yields on sovereign bonds are back to the days of the Black Plague sort of days. And Europe, you know, they're contemplating the Grexit. This seems like Greece might exit the Eurozone, and it seems to be going back to the same sort of time of the, you know, the Dark Ages in Europe, perhaps.
Right, like during the bubonic plague, the price of, I don't know, garlic or something probably hit new all-time highs as a desperate measure to fend off the ravages of the Black Plague. And here we are in 2014, and people are buying bonds, sovereign bonds, in a desperate attempt to stave off collapse. And of course, it won't work.
And the other thing is that since the early 80s, Chinese GDP has been growing about 9.8% per year compared with 2.7% in the US. So it's just been growing at leaps and bounds. And then having said that, Liam says, while the developed economies are set to grow by 2.4% on average in 2015, according to a new HSBC report, the emerging markets are on course to expand by 4.1%. More importantly, Western growth is still far too heavily dependent on rising indebtedness, virtually printed money, and hype. Many of the large emerging markets continue, in contrast, to ride a mega trend of rapid industrialization, urbanization, and population growth like the likes of which the West hasn't seen for generations. So none of it is debt-fueled, or much less of it is anyway in the emerging markets compared to here, where our GDPs only rise if our debt rises.
Well, you know, Richard Nixon went to China and he opened China up, and the idea was, you know, we want China back on the world stage, and with a competitive economy, trade is good, let's bring China back. And then they were admitted into the World Trade Organization, and okay, let's do trade. But then the U.S. decided to export most of its manufacturing jobs to China, and that's where things went pear-shaped for the United States, because they didn't bring in a consumer, they brought in a low-cost labor supplier that gutted the U.S. economy, and all those people that are buying Chinese goods at Walmart, of course, are doing so by going heavily into debt. And that debt, of course, is financed, once again, by China. So it's a heads I win, tails you lose. China wins. Confucius very famously said this.
In fact, Liam Halligan does go into this, you know, many of the emerging markets now looking at the China model as a way forward for them, that they don't need the same sort of democracy, as it were, in America. But he thinks that might be a mistake. But in terms of that, at least China does have 5-year plans and 10-year plans. In America, of course, we only have quarterly earnings. That's everybody's concerned about what the stock price is doing that day or the next day, and that's allowed for people to not have a plan for what happens to the economy when people don't have jobs, when they don't create wealth.
Well, having just come back from Hong Kong, what I noticed is that it's a society that you could describe as being secular. And you used to be able to describe America like this. It's a secular society, but it's become a religious, theocratic, dictatorial nightmare, the United States, driven by agenda of those who are pursuing some kind of religious fanaticism compared to China, which is just a secular nation, like doing it, getting the job done. They're not involved in all these petty squabbles.
So let's go back to what Liam Halligan is saying, is we're returning to the old world order. China has been at the top of has been the largest economy for most of the past few thousand years. And I just want to say for the 2015, a book that you must get is called A Splendid Exchange, How Trade Shaped the World by William J. Bernstein. It's something we read a few years ago. And it really does put into context not only the fact that free trade has been happening for thousands of years, but if you look back, it goes back to 3000 BC, and you see the Chinese were at the top of the game way back then, getting on ships tied together with rope and traveling to Africa, around the Horn of India. You know, it's been like that for thousands of years without any sort of ideology or economic theory or anything. People just do.
Yeah, it's driven by trade. And this is a lesson that America somehow lost along the way. They don't really believe in trade as a way to grow an economy anymore. They believe in the sanctity of the central bank and that they can grow their economy by printing money, which is ironic given that Chinese invented paper money.
Okay, so the U.S. was the #1 economy from 1872 when it took over Britain. And I want to turn to what's happening in the U.K. because, of course, we saw everybody saying that the economy is recovering because GDP was growing because spending was up. Well, warning over UK consumers running up highest levels of debt since the credit crunch after borrowing levels hit £1.25 billion for November. That was just the unsecured borrowing levels, $1.25 billion, which was the highest since February 2008 when Northern Rock collapsed and the beginning of the credit crunch getting really funky. And statistics released yesterday showed that more than $980 million was taken out in loans and overdrafts during November, a sharp rise from the average of $728 million in the 6 months before. Experts said the surge in retail sales around Black Friday, when an estimated £8.10 million was spent online, was probably linked to the increase in borrowing. So it's almost one for one. Every single bit of money that we celebrated being spent online was due to unsecured debt.
Another example of an economy that believes growth is tied to borrowing and financed by printing money. And the result is that you've got an incredibly indebted country where the manufacturing base has been obliterated. And in the UK, Osborne has added close to £1 trillion in debt since he took over the chancellor position. The deficit is still close to £100 billion, and they made a few cuts, but they got the easy cuts out of the way. Now, over the next 2 or 3 years, they're going to add another £100 billion in debt again. So the deficit will go back to 10, 11% of GDP, mark my words.
So the statistics also show that consumers have borrowed more than they have paid off almost every month since September 2012. And I want to turn to the headline about the Conservative Party poster, which is also very similar with like the whole trickle down of never paying off your debts. Conservative election poster, Tories use picture of German road in Road to Recovery election poster. So let's look at their poster, and it says, let's stay on the road to a stronger economy, 1.75 million more people in work, 760,000 more businesses, the deficit halved. Of course, they are counting on the population thinking that the deficit equals debt, but the debt continues to grow because they still have a deficit. So this is the same thing that a lot of consumers, the mentality of the population here in the United Kingdom thinks, well, my interest rates on my loan, on my mortgage went halved, and therefore I can continue to add more and more and ever more piles of debt.
Okay, so it could be a poster for, the new remake of The Wizard of Oz, where we follow the credit card road. Follow the credit card road. Follow the credit card road. Something like that. With, munchkins, flying monkeys.
Are you talking about Tony Blair there or Gordon Brown?
The whole front bench, bunch of flying monkeys.
The interesting thing too is that road was all cracked in the real. They photoshopped it, but it was from Weimar, Germany. So,
of course.
So it makes sense, of course. Also, the interesting thing was that some conservatives leapt to the defense of the merits of this poster. MEP Daniel Hannan, for example, tweeted, "So what if the photograph was taken in Germany? A reminder that our economy is set to overtake theirs in 25 years."
Well, they make 3 central claims in that poster, all of which are counterfactual. Mm-hmm. The deficit, the jobs, and some other number that they quote. They're all completely lies. They're not true. So
Yes.
it's a poster full of lies. I think that's the first point that needs to be made.
A poster full of lies, yes. And we've covered, of course, the fact that all these new businesses and all these people in work are actually self-employed, making less than 10,000 pounds a year, so contributing nothing to the economy. And it's actually a way, apparently, that the unemployment benefits office is forcing these people, pushing them onto this, declaring themselves self-employed because apparently you get more benefits that way. I'm not sure what it is.
Yeah, the claims made in this poster are fallacious. They're counterfactual. They're untrue. They're lies.
But also, so here, the UK apparently thinks they're going to overtake Germany in 25 years. There's always 25 years in the future. Someday in the future, if wishes were knishes, we'll all be fat, we'll all be German, we'll all be Chinese.
What will happen is that Germany will overtake the City of London, because as soon as the UK votes itself out of the EU, Frankfurt's going to take over all that business, and they'll be #1 financial center of Europe, and the UK will drop to number 3, 4, or 7, whatever.
There has to be a way to combine China and Germany into that poster. So if you see the UK economy along the road in Weimar, Germany.
No, that's something of, no, that's the Zen. That's right. You see the Buddha. I got those confused.
And then finally, bringing it back to the U.S., which is apparently the empire or the largest economy, now no longer the largest economy, it's the second largest economy, and that is peak dream, the death of the young entrepreneur. So the Wall Street Journal is reporting that the share of people under 30 who own private business has reached a 24-year low. It's now, if you look at this chart, you'll see that there are fewer owners from 1989, when there were over 10% of under 30s were business owners, and to just 3.6% today. I think that's also a sign of less mom and pop businesses. Everything is very, like Walmart, huge families, and fewer people running their own businesses. So it's these multinationals with employees over in China and these giant...
Yeah, it could be. No, the high street's been changed dramatically, hasn't it?
Yeah.
You don't have the mom and pop anymore. It's all these huge chains. So true.
And also, the proportion of young adults who start a business each month dropped in 2013 to its lowest level in at least 17 years. So these young people are, according to the Wall Street Journal, they're fearful, they're afraid of the future, they're afraid to take the risk of starting a company because they see their economy declining and declining ever and ever, their wages declining for the last 7-10 years, so they're afraid to start businesses, and that's also another sign that just like Britain before it, the U.S. economy is shrinking.
Yeah, get off that road. The road to ruin. Get off the road to ruin. Start your own road. All right, we got to go. Thanks. Stay tuned for the second half, a whole lot more. Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to Moscow and talk with Ben Aris of BNE.EU. Ben, welcome to the Keiser Report.
Good to hear you, Max.
All right, Ben, a recent headline reads, Russians optimistic for 2015. Despite it all, your despair index concurs that Russians are not as gloomy as the media headlines in the UK suggest. So tell us about this.
Well, the despair index was something we invented. It takes in what's happening in the sort of lower half of the society. I mean, most of the macro numbers talk about the aggregate, you know, the oil money, the rich people. And all we did was a very simple thing. We add together inflation, poverty, and unemployment. And there's an old index called the misery index, which is inflation plus unemployment. And in times of crisis, you know, these numbers, inflation rises, unemployment rises, and everyone's very upset. But it doesn't really capture what's happening in the emerging markets. So we added in poverty. And these numbers are typically, you know, on the order of 4 or 5. In Russia, when it collapsed in 1991, this number went to 2,500. If you imagine that's, you know, unemployment plus inflation plus poverty up into the thousands. And today it's fallen right down into the late 20s, early 30s. And Russia today actually has a despair index which is lower than that of everyone else in the European Union, and until recently was also lower than that of America. And the point here is we've got historically low unemployment. Inflation is a problem and is going up today, but also poverty. Poverty in Russia is below that of America. It's around 11%. In the States, it's been climbing, all these working poor. The situation's changed slightly because of this currency crisis. I mean, inflation's gone shooting up to 10%. But even today, Russia is with lower despair than the rest of the European Union, when you've got countries like Spain with unemployment on 25, youth unemployment of 50%. So life for the average Russian is actually pretty good. And the other polls back that up as well. There was a recent poll here that said that the 75% of Russians are actually fairly satisfied with their life. And that's because everyone's got a job, you know, they've got an apartment, they've got money for cars and phones and holidays. Now their ruble won't buy them quite as much abroad, but compared to what life was like a mere 10 years ago, it's like night and day. You know, they live in a normal country. And in that sense, Russia's emerged already. It's no longer an emerging market. You know, it's on a par with Europe. And again, if you ask the people in the bottom half, bottom third of society, it's actually probably a better deal to live in Russia today than it is to live in, say, Europe or America.
Ben, the way you're describing it is, it reminds me back in 1987 during the stock market crash of '87. It hit the yuppies hard, but everybody else, they didn't seem to care. So it sounds like this recent ruble move is really just hitting the yuppies of Russia, and that's about it.
It's selective, isn't it? I mean, most of Russians live a Russian life, they buy Russian goods, and those prices haven't changed. Where it's going to hit the consumer is the rise of inflation, and particularly rising food. And foreign holidays now are off the card. They're simply unavoidable, and the Russians do like to travel. So it is noticeable. But in the grand scheme of things, it's a little bit more than an inconvenience. I mean, life remains pretty much the same, and it's also starting to encourage some import substitution. For example, we're suddenly starting to get Siberian Camembert, which wasn't possible before because it was simply cheaper and easier to import stuff from Europe.
Wait a minute, Ben. Let me, whoa. You can't have Siberian Camembert. That's an impossibility. There's only one Camembert, and it comes from France. And you can't have Siberian Camembert. You've gone too far, Ben. That's absurd. Now, wait, let's move on. Now, Ben, you spent...
No, there's a lady in Siberia.
Yeah?
She's a cheese nut, and she flew to France and bought the mold and brought it back to Siberia, and has been making, Siberian Camembert with French cheese molds. It has to be. She imported that much of it, and to all accounts, it tastes exactly like the French version. And before, it was impossible to do because French Camembert with the inflated ruble was cheaper than making it in Russia. But that's no longer the case, and now we're facing these new realities, and people are responding in the normal way that economics demands, and producing the products themselves.
All right, let me ask you, you recently were in the UK. You spent your holidays in the UK, and you're an observer, of course, of these things. Your views on the perceptions of Russia in the Western media. So here in the UK, the local press has a certain perception of Russia. What are your views on this?
Well, it's almost entirely negative, or rather I should say that the Western press tends to report purely the negative stories. I mean, Russia is still a country in transition, even if I'm saying it's not an emerging market anymore, and it has large problems. However, there's been a lot of progress too. And of course, this crisis, I mean, there was a certain amount of schadenfreude that came with it. Everyone was sort of gleefully saying, oh, look, Russia's collapsed. And while the ruble collapse is painful and expensive, the country still functions. It basically still has masses of money in reserve, and it's going to be able to buy its way out of this fairly easily. But all the positive stories are largely ignored. A good example would be perhaps the demographics. I mean, some of the Western press were writing that Russia has the demographics of a country at war, and that the population is shrinking, and that's certainly the perception in the West. And yet the Kremlin put through this health reform, this particularly focusing on healthcare for children. And now not only is the population growing, but Russia has the highest fertility rate of any country in Europe, including all of Western Europe. And there's a story, given the reporting on the demographic problems it had in the 90s, that story has been, I think, almost completely ignored. And so people are picking out the bad stuff, but ignoring the good stuff. And there are lots of good stories. I mean, as I say, when I came to Russia in '93, there was nothing here at all, no shops, no services, no mobile phones. And today, all of those things exist. But there's still a lot to be done. I mean, Russia is still certainly not a normal country, in terms of Western standards.
All right, let's talk about the kind of the big game here, because obviously you've got Russia is aligning itself with China, and they've got the Shanghai Cooperation Organization, and they're creating the Eurasian bloc. It's a huge trading bloc, and the U.S. feels that this is a threat, so they are doing whatever they can to derail this project. But I want your comment on some news that's just breaking this week. And this is that Russia is basically put out the message to Europe that they should not align themselves with the trade pact, the TTP of the U.S., that they should basically do a trade pact with Russia. So Russia's, they're trying to extend their trade zone right into the heart of Europe, right with Germany. This is a remarkable development, I think. What are your thoughts?
Definitely. I mean, the Kremlin said all along that Europe is its natural partner. And there has been this idea in Russia about creating a greater Europe which unites the markets of Western Europe and Russia. The trouble is the European Union will never accept Russia as a sort of a member of the European Union simply because it's too big. And this is the problem. Russia is the biggest and richest country in Europe. And that creates a problem for the existing setup, because if you let Russia into its institutions, it's going to dominate it simply by its size and its wealth.
Yeah, but Ben,
and so you've had this clash where they tried to cut Russia off.
Ben, let me jump in. So in other words, Germany's getting hurt. Germany's getting hurt by these trade sanctions imposed on Russia, because the trade is drying up between Germany and Europe and Russia. There's huge trade going on. So
but that's the irony of the situation, is that Europe actually needs Russia, and yet they're trying to push it away for political reasons. But economic reasons, there's already 300,000 jobs in Germany that are directly dependent on Russian trade. And the same with the Russians. They need trade with Europe. But at the same time, because they're being rejected, they've decided to hitch their wagon to the richer part of the world. The emerging markets last year overtook the developed world to become more wealthy in terms of $37 trillion versus $34 trillion in the developed world. And so Russia's betting, well, if you're going to be nasty to us, we'll just go off and make friends with the Chinese. And that makes total sense. And the Russians now have been translating all their settlement of their trade into yuan and ignoring the dollar. And so this is going to be a big problem for the States. I mean, China was doing no settlement of its trade in yuan in 2008, and last year it was a quarter of its trade is now settled in yuan. And 1 ruble is growing. These two are going to emerge as global currencies to the detriment of the dollar. And Russia's actually sitting pretty. It can go both ways, and it already has good relationships with the Chinese. And yet at the same time, you've got the politics of Europe against Russia, but you've got the businessmen of Europe for Russia, because it's already the second largest consumer market in Europe, and it's growing in double digits, and it will continue to grow. And although there's been very little foreign direct investment in Russia, it remains the most profitable investments of any country that's done that investment in emerging markets. And you tell the businessmen, they're all well aware of this, so you actually have this clash between what the politicians are arguing for and what their own businessmen are asking for. So I think in the end, money's going to win out. I mean, politicians are becoming so corrupted by money and companies that the companies, once there's been some sort of face-saving solution to the current political clash, we're going to go back to making money, and that's what everybody wants.
All right, let's talk about oil, because obviously Russia is tied to oil, the oil industry, oil and gas, and the price of oil has dropped pretty precipitously, either because of a glut that has now been recognized, that, or because just because the global slowdown means that demand for oil has dropped off, the price is down, etc. Now, Russia's always been in this situation where when the price of oil is high, it gets lazy and doesn't diversify. And then when the price of oil is cheap, it decides it can't waste any time diversifying, if you know what I mean here. So is Russia finally...
It's the golden rule of countries that governments, if they don't have to make reforms, they won't. Reforms are painful and unpleasant and upset the status quo. And Russia's been in the situation pretty much for the entire time that Putin's been in charge, with growing oil revenues. And particularly in the middle of the noughties, where there was just this torrent of petrol cash flowing through the government, that they didn't need to do anything because they had plenty of money. And it was a bit of a wasted opportunity. So in that sense, the crash of the oil prices is a good thing for Russia, because now they were moving towards making some of the reforms. Already Putin, a couple of years ago, had told the government that they need to lift themselves up the World Bank ease of doing business, which is basically a set of market reforms that you have to do. And Russia's already gone from 120th to about 80th, and will get to the top 20 probably in the next 4 years. But that by itself is not enough. And this slowdown, this squeeze, you know, we're going to have 2 years of negative growth, which is going to be a first for Putin, will force the government to refocus, or at least we hope they will. I mean, it's not a given. But that should actually be a net positive for the country, in so much as they'll focus on some of the economic reforms they needed to do. And they haven't done them before because they didn't need to. So in a way, this is a good thing. And again, the crisis this time around is going to be painful, it's going to be expensive, but it's not a crisis in the sense of the crisis we had in 2008, where lots of things went bust, in 1998, where, you know, the top tier of the banking sector was destroyed. Russia can afford this crisis because it has plenty of money in reserve. And also they freed the ruble, which will actually cushion the blows. So
all right,
it's
Ben,
going
we're going to have to cut it off there. We're out of time.
A very sharp one.
Okay, Ben, we're out of time. We're going to have to cut it off there. Thanks for being on the Keiser Report.
Pleasure.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I'd like to thank our guest, Ben Aris of bne.eu. If you'd like to get in touch, tweet us at Keiser Report. Until next time, bye, y'all.